Well, hi, friends. Patrick Kirby here from Do Good Better Consulting. Happy guest expert training day. We got a great one for you, ones that you don't really think about, but you should. And I'm excited to bring this to you. So thanks for all of you joining us live, and thanks to you joining us in the replay as well. So we're going to talk about audits today. A unsexy, very not fun topic as you think it isn't. But actually, talking about audit stuff is epically important because we need to do it. And we need to use our audit partners as our friends, and they can be our allies. And I would like to welcome Christine Clubb to our show. Hi, Christine. How are you?
Good. How are you guys?
So Christine is a CPA with Fieberger, Swanson, and West here in Fargo. And she, her particular genre, I guess that's not really it. Her expertise is with the nonprofit industry, helping with audits and all things, audit questions. And so, Christine, why don't you say hi to the folks, maybe introduce yourself, kind of tell you how you got here and why nonprofits, that is your chosen area of profession.
I graduated from NDSU in December 2008 and started with Fieberger right after that in January and hit the ground running. So it'll be 10 years in January. I kind of fell into the nonprofit thing. I just got on a couple of those audits and really loved it. They're interesting. They're different. They're not your normal commercial entity. So they have all those fun little things like restrictions and donors and, programs are running. And the other fun part of my job is I get to spend a week with nonprofits throughout the year and throughout the community. And so you really get to jump in and meet those people who have these huge hearts that are doing these amazing things. And I just get to kind of pretend I'm part of them for a week at a time. So it really makes my job fun.
Outstanding. It is the word audit to executive directors and especially the fundraising crew is usually followed by a bunch of expletives and the oh God, not again kind of thing. Why is that a misnomer? I think we usually don't use auditors as our partners, and we can. But why out of the gate everybody just rolls their eyes at the whole audit process?
Well, probably part of it's a lot of work, and it's that kind of that misconception that audit is that necessary evil, that you have to have them, and it's, oh gosh, they're coming in, they need all this stuff, they're coming to pick apart our numbers. But really we're there just to, it's kind of our motto is trust but verify. We trust what you're doing, but our job requires us to verify it. And so unfortunately, sometimes that's just preparing a ton of documentation and really looking at it and going, okay, are your numbers what you're saying they are? And so really it's a lot of work on both ends.
I like it. Well, that is a wonderful transition. Beautifully done, by the way, to kind of our first topic, which is being prepared. I think it is probably one of the most important things you can do before an audit starts. Let's talk about that. What sort of things can an organization do right now? It's towards the end of the year. Everything's going bananas and crazy. We've got our end of year appeals out. We're probably getting phone calls from donors who are saying, I need to give you money. And as much as we're really excited about it, what can we do right now to prep for the end of the year so that we are not shocked at what an auditor is going to ask for, or things that we can do right now to kind of cross off our to-do list and get prepped for when you walk in the door?
So one of the big things is, especially if you've got the same auditors again, they're always going to send you that list of stuff that you need. It's called the PBC list, the prepared by client list, and really go through that from last year. See what things they needed last year, because chances are they're going to need the same things again. So start looking at that, pulling that information together, but then making sure when you do get that new list that it's quality stuff. Like we're always going to ask for similar things from year to year, and we always take that information and we're going to compare it directly to the numbers that you're giving us. So if you provide us an invoice or a reconciliation, it doesn't actually tie to the numbers, kind of has to tie to the numbers because we're going to come ask why it doesn't. So As long as you know why it doesn't, I mean, we can run with that. And then the other thing is touch base with your auditors. Meet them for lunch, say, hey, audit's coming up. What timing are you thinking? But then also, what things can we do differently? What things didn't work last year, or do we need to do differently? What reconciliations can we do that you guys normally do? Or what journal entries do you usually get during the audit that maybe you can tackle this year, so that it's one less thing that the auditors are preparing. It's just kind of focusing on it. It's a team. What can we do better? Or what things have changed during the year. That's really the big thing, because the wrenches get thrown in at the last minute going, oh, that's new. So it's just kind of looking at those things throughout the year and going, okay, they're probably going to ask this question. Maybe we should let them know what's going on ahead of time.
Put that in the auditors are totally going to ask about this file, and then we better have an explanation. What are the top couple of things that you find in most organizations that come up consistently? Like, what are on that list of things that you send for them to prepare?
Mm-hmm.
What are the couple that always come up over and over and over again that you wish if you got this right, 90% of your issues would totally go away?
Right. Especially with nonprofits, we're always going to ask for your list of donations. Who gave you how much? Was it restricted? Because we pull those and we actually send confirmations to those donors. 99% of the time, those listings need to tie to something on your financial statements. Actually, and so what we need you to do is make sure that if you're providing us a list that we're pulling from, that it's actually supporting something on your financial statements. If it's total donations or total grants, those lists got to match, because if they don't, we're going to ask you. And that's something that we actually do quite a bit ahead of field work before we're actually in your offices. So getting that list together, making sure it reconciles, is usually a pretty big one.
And now, so if you have a small nonprofit and it is you do not have a fancy pants blackbaud system, you have not paid $58,000 to just throw your computer out the window in frustration, you have a spreadsheet. And you have a spreadsheet of a list of people who donated, and what else and what other information do you need on that list as it matches up with your financials?
Really a name and a dollar amount, and then if there's any restrictions on it, because we're going to just pick a sample of those, and then we'll send them back to the client to prepare, so we don't need to see their addresses and all that stuff. Really, it's just that listing and making sure it ties.
So the basic of the basics, if you can just make sure that your financials and your Excel spreadsheet has a name and a dollar amount, and probably a date in which you got it to kind of help you out. And at a bare minimum, what is the restriction? That would be great. Talk about the restrictions a little bit, because I think that's the frustration that nonprofits have when they are soliciting individuals for donors is, oh God, this person wants it to go here, or this person wants to go there. Ideally, you would have none. But what's the biggest hang up when it comes to restrictions? Because one of the things that we're trying to get into our brains is have a conversation with your donor to tell them that they should trust you as an organization to put it best towards whatever your mission is, even though we know deep in your heart that you want it to go to this particular program or this. Put no restrictions on it so that we can use it our best. We're always trying to tell nonprofits that. But what about restrictions are frustrating on your end that are then tailored to frustrations in the nonprofit world?
So with restrictions, a lot of times we see, because they're legally binding for nonprofits. And so when we do our testing, if a donation comes in with a restriction, we have to make sure that you actually spent it on what you were supposed to. And really looking at, did you use it wisely? And then you might have a program that has all these restricted donations and they don't have enough expenses. And all of a sudden you have this fund for this program that's ending in 6 months. It's got enough money to last another 18 months. And so then you have all this excess funds, which is great, but you have that program that it's supposed to be used for. So it's really kind of looking at and making sure when you are getting donations from donors that you're not kind of over promising that this program is going to go on for so long when maybe it's finite. It only is going to serve a purpose for a year. The other problem is, if you get too many restrictions, you have all these little pots of money that you have to track, and all of a sudden you're down looking at $500 and you're trying to track that it's for these 4 things, administratively it gets to be a headache. And so it's really just making sure that, because if you get those restrictions in, you have to track it. And sometimes just the tracking becomes its own full-time job, when really your time is probably spent actually running a program.
That's very true. So in more to the point is our communication with our donors is super important, but also, and what a nice tie into the next thing, which is building a communication bridge between your nonprofit and your auditors. I think one of the points of contention is, here's the auditor's expectations, here's what the organization has, and there's a little lack of understanding between the two. What can you talk about as our kind of our second point of the things you can kind of really knock out of the park when you're working with your auditors is that communication piece? How important is it? What can you do? How appropriate is it to call auditors on a regular basis if they have questions pertaining to a donation that maybe happens in March, even though you're not being audited until the end of the year? What does that look like in relation to nonprofit to auditor?
I think you hit the nail on the head when you talk about something coming in March, and then we're coming in sometimes 12 months later going, okay, this donation came in, what was it for? And you're like, well, I think it was this, but we kind of spent it on this. Talk to your auditors. If you get something weird in, you get a different grant, you're not sure what goes into it, especially with federal grants, there's a lot of restrictions on those. Your auditors are on your team. They're your consultants. We would much rather hear about stuff as it's happening than 12 months later. Or if someone comes in and says, hey, I want to give you X dollars over so many years now, you have a pledge. You have to account for those differently. And they're a lot easier to set up ahead of time instead of at the end of the year. Really, on our end, we try to meet with our clients throughout the year, just to touch base, to give them that sounding board that they can say, hey, this just came in, what's going on, or new standards. Accounting standards change throughout the year, not just at year end. And so you might take training and all of a sudden you're like, well, what's this new thing? And are we doing it right? And so we always tell our clients it's easier to take care of it at the time that something is happening rather than at the end of the year, or during the audit when we're probably after year end by a few months. And really kind of, as things come up, it's easier to even give us time to do some research on if it's something new that we haven't seen. It's a new kind of endowment. It's a new kind of investment. Those things are constantly changing. So it's always just nice to touch base and make sure that when we come to fieldwork, we're not having this new project we have to do in the middle of fieldwork to try to do some research.
So you're okay with a nonprofit that you work with calling you up at any given time to ask a question so you don't have to deal with it 12 months later?
Absolutely.
I love it. See, that's the best. So if you ever have a problem, if you ever have a question, if you don't know the answer, please call your auditor, because your life will be so much easier towards the end of the year when you're not scrambling. And I talk about this all the time, which is documentation. Document. Make sure that you are writing everything you possibly can down so that you can refer back to it if you don't get an audit question answered right away. At least you have really great documentation on the who, what, where, when, why about whatever donation came in or whatever conversation you had with the donor. And that kind of stuff, if you have a conversation with your auditor about it, they'll also document it. So you can actually come together and have that communication piece, which I think is really important. It's super critical on all those things too. That was good. I was just going to go for yeah, that's great.
Yeah, that's good.
So the third piece to this, which I think is really the most critical, I think, is finding value with the auditors. A lot of organizations, because they have this, I don't like them, it's work for me, or what I'm going to do. Let's talk about the value add that you bring to an organization, the value that an organization should be looking for. What are some of the things that maybe we think of as being negative Nancy's, and what we should be is positive Patrick's, right? So what are a couple of values that we should be finding the positive in?
Right. One of the biggest things we always tell our clients, and we work with them a lot, is in your footnotes on any nonprofit, you get the option to put down, what do you do? And we really, a lot of them start out pretty generic, but we tell clients to take a look at that. Is it accurate? Is it including all of your locations and all your programs? Put a little blip in there about each program, pick your best 3, your best 5. It's really your chance to tell your story other than the numbers. A lot of people kind of end up ignoring the disclosures a little bit just because they're usually pretty lengthy and pretty detailed, but it's your chance to get your story out there. And the best part is the Form 990, the tax return that goes with nonprofits, has the same information and has the same, kind of the boxes to fill in with what you do. And that is actually out there in the public. So if any donors are kind of not sure what you do, they can grab that, or they can grab your financials and get a good idea other than just the numbers. It's kind of that warm, fuzzy feeling you get reading the disclosures versus looking at your bottom line going, okay, well, that's, they're making money, but what are they doing with that money is the big thing.
Well, and I think you can help give stats to the gut feeling that people have when they donate to an organization. There's the science to it, and then there's the art. And the art is the real storytelling you're doing about impact. And then you get to we're making great impact and we're affecting the community, and we're using all those buzzwords that we use in the nonprofit industry, and using the auditors as a partner in telling that story. You can really get good at explaining, this is what we do, and here are the facts, and
Right.
here are the things. Using the numbers that you have audited as your friend can really help sell a donor or an organization, or use it for a grant, about how effective you are with your donations and your gifts, right?
Mm-hmm. Oh, absolutely. And I mean, not only do you have the footnotes, but you have a lot of places can add schedules after the footnotes, just kind of detailing out things. A common one is your statement of functional expenses, which will break down all your different expenses by program. And so you can really see, program A is where we spend a lot of our time. This is what we do with those dollars. And, we have all these other programs as well. Maybe there's a donor out there that's like, oh, program C is really the one that I want to fund. And, maybe they, it's 25% of their budget. Maybe I can help them out and make that a bigger part of what they do. And so it's really, you have a lot of options, and you can, add financial schedules like, what your net temporarily restricted net assets, what things are we funding this year? The sky's the limit on what you want. Granted, numbers will have to be audited, so you have to support them, but it's really looking at, maybe what do you look at on a monthly basis? Maybe your donors want to see that. Put it in your financials.
And I think part of the financial schedule too is donors, uneducated donors, and the way that we've worked donors in the past are 94% of all that we raise goes to programming. And then we are celebrating these organizations that work on pennies to the dollar as part of the organization, which drives me insane, because if you're spending all your money on programming and you're spending none of it on administrative stuff, you don't have the manpower to do the things you're bragging about in the first place. So you're a liar. And I think using some of these financial schedules to showcase that your administrative costs are necessary to running the program, that you don't have to be this, I'm working for pennies on the dollar, because you can justify through your audited schedule that this program does this, and this program does this, and this program does this. There's a cost to run these programs, and this is the impact that these programs make. So you can take away this terrifying, we don't have a percentage that's compared to X other organization in town, because if you don't have administrative running the programs, you can't run the programs. And you can use your audited schedule to actually back that up. And so when a donor confronts you, or they're not going to confront you about this, but when you're presenting your case to either grant writing or sponsorships or other businesses, you can use what your auditors have teamed up to help you with to tell that story in a way that is not a he said, she said kind of thing. These are facts about the organization in itself.
Right. And the other thing with that too is if you've got administrative costs and all of a sudden, you're looking at percentage of the total and they just keep going up every year, maybe there's costs that are sitting in there that really are programming that need to be allocated over. And then, for when you're applying for grants, some of those admin costs become direct costs, and direct costs are usually funded better than administrative costs, or there's not as many limits. And so it's really just looking at, are those columns, are those functions, are they reflective of what you're doing? And if not, is there a better way to show it?
That's a wonderful way. And then again, that is such a value that an auditor will bring, is helping you navigate those little muddy waters. And again, we're not experts in the fundraising field. We're expert storytellers. We're expert schmoozers. We're expert program directors and program managers. We're not experts at auditors or auditing things, or we're not experts in finance. And so the same way that we give responsibilities to designing a brochure to somebody who has the talent to design a brochure is the same way that we should divert some of these questions of finances to our expert auditors and use them as that partner as we communicate for a lot of these things. It just makes common sense to me. So what kind of verbiage do we use on receipts? Throw it out there, because I think we've got, it's the end of the year when we're sending out our tax receipts. We're sending out, what they get and what they don't get. I get asked a lot on in-kind donations versus cash donations, and what do we do? What's the difference between the two, and how do we separate that as far as our receipting goes, as we're sort of churning them out towards the end of the year here?
Right, and that's a big question we get a lot, because in-kind is kind of that weird area where you're getting things that you're using. It's for the silent auction. It's for, the program. You need to come up with fair market value. And really that should be done on the day that you're getting those donations. And so like we talked before, you're keeping that documentation as you're getting those things in the door. Write down what the fair market value is, or have the donor write down what the fair market value is, so that you have record of that. And then when at the end of the year, when they get a receipt back of you donated X, Y, and Z, those things are included. The cash is easy. Cash is cash. There's usually a check, there's a transfer, there's a deposit, there's something there. In-kind thing is probably something you'll have to track separately. And it should show up on your financials. It'll wash itself out, because it'll be an in-kind revenue, an in-kind expense, but it still needs to be on there. And having a schedule detailing that is really important. Because like I said, there's not really it's not a process that automatically generates a receipt. It has to be something that's manually done by whoever's taking that donation, whoever's running that silent auction, whoever's running that program, to make sure that it's, it's one of those things throughout the year. We're going to come ask for it. It's not something that's easily recreated at December 31st when it happened in June. So it's really one of those things that when you're putting together those receipts that go back to those donors, your donors will remember if they, gave you a silent auction basket. They might question it on their end, but they might not say anything to you. So it's really important to get those things on there, because donors want credit for what they give you. And so they're going to want to see that on that receipt at the end of the year.
They always remember. They always remember. Remember when I gave you that $38 back in March? Nope. But I appreciate the gift. That's great. Thank you. They do. And so just kind of another quick one. You do not give them a tax receipt for the in-kind donation where you put the value on it. It's their responsibility to go to their tax accountant to say, I believe that the pair of knitted socks that I donated to your gala is worth $3,000, and they get the responsibility of that. You just acknowledge that they gave it to you. Is that correct? Right. Okay. And that's just a big thing, because at the end of the year, people are kind of adding up a whole bunch of those things, which is super great and fun. That's great. Fair market value for sponsorships. This is another big one that I think a lot of people, because this is event season, we're going crazy with events right now. A sponsorship of, let's just say, $1,000. And that sponsorship comes with X amount of seats at a gala. Fair market value for that $1,000 sponsorship has to include what?
you need to just split it between what is actually purchasing the food or like your butt in that seat versus what's the intrinsic value of, I feel good, so I'm making that's a donation. Because it gets reported separately between is it a donation or is it actually like an event revenue, because there is a footnote that goes for special events, and then we have to break out what's ticket sales versus actually donations. And so it's kind of evaluating where's that split, how much goes into which pot.
Right. So if you are putting on an event, what is the cost of food per person? What is the cost of the booze per person? Is there a value for the band? Do they get a gift basket? And what is that value? There's a lot of work that I think has to go into determining what a person is getting a value when they come to your event and then what they're paying for. And then it's a simple math equation, again, ask your auditor, on what the value is. Because if you can get your auditor up front before you start selling tickets to say, yeah, that makes sense, and this makes sense, and you should do this, this, and this, and you get the thumbs up, then you're good to go. The worst one that I have experienced is we threw an event and we didn't have any of that. And then the disaster of going back and trying to justify and then redoing receipts for what we gave full value of their donation of a ticket, yet they got food, drink, band, gift card. Like, that was possibly the worst in the entire world. And again, it was all our fault because we didn't do our due diligence, like prepare or communicate or find value in partnering with our auditor groups, because we were dummies, and I will never do that again, and that'd be great. So
you do it once, your auditors ask for it, and you go, okay, that's the one thing I need to put in the audit file. I mean, we have clients that literally just have a file folder on their desk, and they just print emails and throw it in there, and they're like, well, inevitably, it's the Murphy's Law of auditing, is that if we are going to pick one random thing out of a list of 100, it's going to be the one that's weird. It's going to be the one that, oh yeah, I was going to tell you about that one because it was weird. It never fails. I pick random invoices and they're like, oh yeah, that's the one that, got lost in the mail, but we paid it twice, and it never fails.
It is 100% true. It is the Murphy's Law of auditing for sure. If there is one thing that if somebody is brand new to the nonprofit world and you needed to give them one piece of advice while they're just trying to get ready for an audit, what would that one piece of advice be, just to let them start and grow their wings and fly, if you will?
If you're looking at brand new nonprofit, your first year audit, don't be afraid. We're not there to beat you over the head with you're doing all these things wrong. It's just first year is always going to be a learning curve too, because we're going to be learning about you. You're going to be learning about us. Go into it with an open mind. It's not scary. It's, if you get good auditors, they're there to help you. And really just take whatever you can from that first year and go on and improve the next year. That first year is always going to be a little bumpy. And that's just the way things are, but it's really just embracing the process and not being afraid of it.
Christine Club, this is fantastic. We've been doing a bunch of these. This is one of the most informative. This is the one most easily digestible from a complex subject that we have had. I cannot thank you enough for.
Well, thanks for having me. This is fun. I haven't get out of my shell a little bit. I don't usually do these kinds of things.
We're not in front of a computer doing math. We're actual people trying to help you. Amazing. So tell people and I'll drop your link in your connection in the chats as we put this into our file of great videos. But how can they get a hold of you? How can you help them? Drop information. Go. What are you up to?
Sure. Really, the easiest way is to give me a phone call. You can call our front desk, 701-280-2100, or check out our website. It's cpafargo.com. And the contact information is in there. All of our bios are on there. So just check it out. And or get a hold of Patrick. He has my information.
We'll do that as well. Perfect. Christine, thank you so much. This was enlightening. This was awesome. This was fantastic. We'll load this up for everyone to see. And we'll be in contact soon because I owe you a high five and probably 70 coffees. So that's awesome.
Awesome. Thank you.
I love it. Thanks, everybody who's been watching live. Thanks for the replay. Appreciate your time today. Thanks, Christine. You're the best. Bye.